You hit the extremes, that's when you pick away at markets. We've sold some interest rate exposure today. Interest rates have moved up a fair amount, or rates have come down, prices have moved up a fair amount. So we take some chips off the table on where you've seen performance, but you got to wait for extremes. Like, quite frankly, some of the volatility markets where you can own some calls and manage your underlying against it has been a place you can actually make some money. So we've been doing a fair amount of that.
Interesting. So I'm not sure if you heard the commentary earlier in the week on our program with Jeffrey Gundlach. He was talking about volatility in interest rates and some of the opportunity that exists because of a likelihood of a pickup in that volatility in that particular part of the market. You agree with him then?
So I think there are opportunities, but we also just got a big move. Given the downturn in the equity market, rates have rallied a fair amount. You're pricing in an awful lot of movement in terms of what the Fed's going to cut from here, and that is the anticipation that you're going to have clearly a slowdown in global growth, clearly a slowdown in supply chains in terms of where companies are here. So, we're taking some chips off the table. We still love the front end interest rate market. We love 2 years to 5 year interest rates. We're not in zero rate zone anymore. They carry really well. And if growth slows, then you've got a pretty good opportunity where the Fed will start cutting rates.
But as long as China remains the headline story, rates, you got a cap on rates, don't you?
You do. It's hard for them to move back much, and they're a great hedge. They've been a great hedge against some of that risk. And you know what? You're not getting really the inflation report today. By the way, I'll make one point about this inflation report. You're not getting much inflation in the system. And just this Uber conversation is so interesting. What dragged down inflation today was used car prices, down 1.3% in April. And I was looking at some of the data. Core goods, in 20 years, the inflation in core goods is zero. And core services actually was doing well as rent. And what did really well was actually shelter prices. The dynamic around how the world is shifting in commerce is so profound in today's environment. You're not getting much inflation. The Fed doesn't have to do anything, but it's because you're seeing the shift. Why on the show do you spend so much time on Uber? It makes sense. That's where commerce is today. Why is when Apple's earnings comes out? It's just extraordinary in terms of what's happening in the economy today in commerce.
Do you agree with Chairman Powell that the inflation is transitory, though? That you're going to get more of a pickup, or do you disagree with him?
Yes and no. If you take some of the, he's targeting a 2% inflation rate. I actually do think towards year end, you'll get another 30, 40 basis points on a core CPI, core PC. So getting close to 2%, yes. It's the lowest volatility of inflation in 100 years. Core goods, no inflation for the last 20 years. In the last 73 months, you've only had 5 positive prints on core goods. When you think about where you're getting it, you're getting inflation in shelter. And what's great, think about it, you buy an apartment, you take Uber, but you need a TV now. Do you need a good like you had before? The world has shifted. I think inflation's moving up moderately, but it's just not interesting, and the Fed can just go away for a while, doesn't have to do anything.